Recording.
Oh, okay.
Okay. Hello and welcome back to my YouTube channel. My name is Anu Joshi, and on today's video we have Charlene Ward, who's a mortgage agent in Toronto. Hi, Charlene.
Hi, thanks for having me.
Yeah, absolutely. Our last video was fantastic about purchasing under a corporation, so thank you for sharing your knowledge. We have you back because there are more questions that people have about mortgages, and I want to talk to you about how to get a mortgage approval for somebody who is self-employed.
Okay. So if you're self-employed, in terms of getting a mortgage approval, it's usually something that we would do, once you've actually gone ahead and put an offer in on a property. So depending on how exactly you've filed your taxes and what your situation is looking like, because everybody is so different in terms of self-employment.
Yes.
We could take you to a lot of different lenders. Actually, we could take you to this is a little rare, but we could take you to a lender with best rates because you've claimed all your income. Self-employed people don't really do that, but that's one option. Another option is to, not claim everything and to be able to basically take you to an alternate lender where rates are a little bit higher, but ultimately at this point you would have had a chat with your accountant to find out how you'd like to, file your taxes and how you can save money.
Right.
And it's likely that paying that higher interest rate is going to make more sense for you than paying the taxes, right? So in that option, taking you to a lender that is an alternate lender that's going to charge you a bit of a higher interest rate, you're going to be paying basically a lender fee, which is usually 1%.
So that's kind of lender fee payable, they have to, is that something that the buyer has to pay out of pocket right away, or is that when they actually get their mortgage?
So that's when they close, they'd have to pay that out of pocket before closing.
And that's 1% of the loan amount, correct?
Exactly. Yeah. There's also usually a broker fee involved as well. Just depends, and it varies situation to situation, but there's also broker fees involved.
Okay. Yeah. And do you know how much the broker fee is in the range of?
It would just range usually 1% of whatever the loan amount is. So expect to pay about a 2% fee. It could range. It's different for everybody. So, and it's different for every file, right? So I don't really want to quote that it's going to be exact 1%, but there's usually a broker fee, which is disclosed up front.
Yeah, so it's just an additional fee that if you're self-employed and getting a mortgage, then it's just a little bit extra that you would have to budget. So you're not, short pressed for that few additional at the last minute. Now, for self-employed, is it true that you have to have worked in Canada or filed taxes as self-employed for 2 or more years to get a mortgage?
So you have to be self-employed for a minimum of 6 years. So basically it used to be 2 years where you'd have to show 2-year history, but there's actually a new program that's come about where even if you've been self-employed for 6 months, it's still an option where you can actually still get a mortgage approval. And if you've already kind of been in that line of work prior to, it just helps your application that much more. So 6 months is the minimum
6 months. Okay, now in terms of taxation, I know obviously for the mortgage approval, buyers have to show their tax documents and their income that they filed with CRA. Now, let's say somebody starts working in the self-employed in the middle of the year, right? Let's say in May. And so their 6 months they've been working from May to November. The year hasn't ended yet and they haven't filed self-employed taxes yet. So how would that affect their qualification?
So usually in most cases, we're not really looking at tax documents a whole lot. We're more so looking at what's coming into the bank statements. Kind of using that as a way to gauge how much income is coming into the business as opposed to taking a look at their tax documents, because we know that never actually is a true reflection of what's coming in. So in that case, we would basically more than likely be looking at the bank statements anyway, and we'd kind of be going through and taking a look at an average of how much is coming in and how much is predicted to come in the coming months, right? Because being self-employed, it's kind of like a waiting game too. It's not just what you're earning right now. You probably have another 4 months lined up of income that's coming in.
Yeah.
So just kind of showing that sustainability, showing that you've already made this much, you're already set to make this much coming in the in the coming months, if I can catch my breath, in the coming months. And just showing that sustainability that, your business is running pretty much.
Right. And this is all subjective, right? Depends on the lender and the lender having confidence in your business and your business sales and your, basically ability to generate that income.
Of course. And of course, making sense of, the situation as well. That's the most important thing. Like, we can't just hand the documents over and be like, figure it out. Like, we have to talk to our clients and find out exactly what their specific situation is and what's happening, and paint that picture for our lenders so that they can also understand what we're dealing with in terms of the profile of our client.
Right. So in terms of profile now, are there certain businesses or certain industries where it's easier to get a mortgage as a self-employed person versus others?
Well, if you are pretty much claiming everything, then yes, it's easier. But otherwise, to be honest, it's just really, I'd say it's pretty much equal playing field in terms of like just making sense of your profile and the story, and having everything on paper. So of course, if it's like a full cash business, that's going to be a bit difficult.
Right.
So that's a little hard to show, right? I mean, it's different if you have like a business where there's a lot of deposits showing your bank account, but then there's also a cash component. That makes sense because sometimes we do have a cash component, right? But in terms of something that's all cash, that's a little bit more of a steep
right. The paper trail is obviously not there for the entire, let's say, down payment or just to tabulate your sales that way. That actually leads me to another question. What is the minimum down payment that's required for a self-employed individual?
So it depends on which lender we take them to, but usually 20%. Sometimes it can go up to like 35%. So.
Okay. So the minimum is but 20 or more. A self-employed individual cannot purchase for like 5 or 10% down.
No. Unless they're claiming everything on their taxes and we're taking them to like an A lender, then they can put however much they'd like.
Okay. And then that'll be though based on the tax returns, correct?
Exactly. Yeah. That's kind of like your cookie cutter. Like, imagine like a salaried employee. Everything's kind of cookie cutter. It shows exactly what it is. Yeah. That would be 5 to 10, 20%, whatever you want to put down. But for the most part, if it's not that, then 20% is the minimum.
20%. Okay. So they should calculate for 20% down payment plus the approximately 2% in fees for getting the mortgage. Exactly. They have it. Plus closing costs. Obviously, we have to take that into account as well. Now, if there is a self-employed individual that, let's say, has just started, let's say they're in IT or they're a physiotherapist, and they were in a job until now, and let's say post-COVID, let's say they lost their job, but they've started, their own business, same field, same everything, but obviously their income has taken a hit, and they've only started this, let's say, 2 months ago, but 2020, they were planning to buy a home. So what would be their sort of next steps in terms of continuing on this path to purchasing? What would you recommend to them?
So if I understand correctly, they just started their business 2 months ago?
Yes, because they lost their job during COVID. Let's say.
Oh, got it. Okay. I thought you were saying that they like just started their company 2 months ago, but they didn't make anything. And I was like, wait, what? Okay, I understand.
It was working, right? And they lost their job. So they decided, okay, let me just do the same job function, but now I'll do it on my own because I'm not salaried anymore. Exactly. So they've only had a 2-month history of their corporation, but they want to purchase. So how would that work with the mortgage approval?
Yeah, so with the mortgage approval, of course, we'd have to kind of wait till like the 6-month mark. Now, in terms of like their income, I can always kind of like give them a bit of a rundown of what I would need from them to be able to show their income and what they'd be looking at in terms of like possible fees, possible rates. And then I think the next step would be them kind of connecting with their accountant to see which route would be best for them in terms of how much, like how they want to save, right? Some people may kind of look at it as like, well, I'd rather avoid the interest rate and pay the taxes. And then the majority would be like, I'd rather just avoid the taxes and pay the interest rate. So it's kind of like what I do personally is I kind of go through and kind of give them the options of like, hey, here are the different routes we can take. Here's what I would need to show for you. And going forward, then they kind of take that back to their accountant and figure out how they want to like file their taxes down the line, right?
Yeah, and how they're going to
have a timeline, of course.
Of course. So you do need the minimum 6-month history for self-employed individuals.
Mm-hmm.
Okay.
Exactly.
What if a self-employed individual is purchasing with a salaried individual? So let's say it's two spouses. One of them has their own company, and the other one is salaried, and you know all the income tax docs and everything is there. Would they have to then fall under the mortgage qualification rules for the self-employed individual, meaning 20%, or can that couple purchase for, let's say, 5 or 10%?
So again, all comes down to how the taxes are filed, right? If we are if it's showing that, let's just say they've claimed 50,000, but they actually make 180,000, and we need 180,000 to be able to qualify them, then they're going to have to place the 20%, and we're going to have to bring them somewhere where, you know, we're not going to show, I don't want to say we're not going to show their tax documents, but we're going to more so be focusing on their bank statements, and their invoices and their contracts, and kind of show that, you know, this is a business that's stable and running, and obviously going to continue to be successful. If we don't necessarily need to use that much income for them, and we have somebody who's making a salary of 200,000, and we only need the 50,000 that we're able to use on their tax documents, then they can place the 5%, and that's not necessarily an issue.
Okay, so it all depends on the income qualification, basically.
Pretty much, yeah. It depends on how much we really need in terms of the self-employed individual to use for them. To kind of make things work. And it could be a scenario where we don't even need to use income for them because a salaried individual makes that much. Sometimes that can be the case. And we don't even necessarily need to use any income for the self-employed individual. We can kind of just have them place 5, 10, 20%, how much they can qualify with.
Okay, that's fantastic.
In terms of affordability.
The board knows that in the Toronto and GTA market, we need income qualifications are very, very high. You know, to purchase an average priced home in Toronto or the GTA, you need a significant high household income. So.
Oh, definitely. Yeah, it's kind of intense right now, but there's still affordable options. Like I saw your video where you were talking about that property that was 700,000. And you said that there was rental potential there as well, right?
In that one, yes, there was a basement. Yes, absolutely.
Yeah.
So you know, so it is possible. It's really about finding the right solution at the time. It's one thing to generalize and say, you know, all prices are going up everywhere. As a generalized statement, that is true. Yes, all prices are going up everywhere. But when you really get into it on a neighborhood level, or you know, even which is even smaller than a city level, certain neighborhoods are actually, you know, untapped reserves of potential where you can still get in, you know, to a fantastic city, fantastic area under market value or under, you know, in comparison to all the other neighborhoods or other cities in the GTA. So it's just about finding kind of what works for that client. It's the same with, right? You have to kind of tailor your solution to.
Exactly. Yeah. Similar to the self-employed avenue, either you want to pay the taxes or you want to pay the rate. And it's kind of for you with your clients, I'm sure you're kind of do you want to travel and buy something cheap that's a little further out? Or do you want to purchase something that's in the city and not have to travel, right? So it's all about those checklists that you kind of have to go through with them.
Yeah, it's a trade-off, right? And for different people, the priorities are different. Even given the same choice, there are certain families and certain individuals that will pick one option and others will pick the other. It's just, it's based on comfort level, right?
Exactly. Yeah, I agree.
Perfect. Well, Charlene, thank you so much for shedding light on self-employed individuals, how to get them approved and how to get them into homes. Thank you for sharing your knowledge. Did you have anything you wanted to share with our viewers?
No, I mean, you can find me on Instagram.
You on the spot like that?
You can find me on Instagram at Your Toronto Mortgage Broker. I share a lot of tidbits on there in terms of purchasing. And yeah, I think this is my first YouTube video, so I'm a little honored. Thank you.
Awesome. Well, thank you so much for being on here. You guys, if you have any more questions about real estate, about mortgages, reach out to us. I will put Charlene's social media links down below, as well as mine. You can reach me at Joshi Realty. Thank you for watching, and we'll see you guys on the next video. Thanks, Charlene.
No worries.